Good afternoon from Los Angeles. It's Alyssa Quorum and Justin Nielsen here with a look at the stock market today. And on today's show, we're going to be talking about a tale of two charts using Progressive and Paylocity. And we're also going to take a look at the initial earnings reaction for Netflix, which reported after the close.
Yes. Okay. Sounds good.
All right. So first, let's take a look at the major indexes. We finished up higher across the board. The Nasdaq about 0.3% higher. Same with the Dow. The S&P 500 a fraction higher. The Nasdaq. Well, the major indexes pulled back within the last 30 minutes or so, though.
Yeah. We're doing the notes for the show, and it's kind of like, we changed the headline 5 times before we got on the air. Basically, what happened was the Nasdaq got to that 8,000 level. This is something we've been talking about as a potential resistance level.
Yep.
It seems like not that long ago that we were looking at 7,500 and the 200-day moving average.
Amazing.
But now here we are at 8,000. You had a lot of strength in semiconductors. The SMH semiconductor ETF that was up at new highs, and so tech really seemed to be like what was driving it. And then in the last half hour, we really saw some quite a pullback. There was news on Qualcomm and Apple, settling things. Apple pulled back a little bit, but it didn't seem to really explain what happened in that last half hour.
That's right. And as our markets team is noting, even though maybe the intraday chart looks pretty crazy there at the end, the range of the day wasn't too big of a range. It's relatively quiet.
Yeah, and here again, this is where if you're looking at an intraday chart, you might be like, oh my gosh, what happened? And if you look at the daily chart, it was a pretty tight spread the entire day, maybe only a 0.5% movement in either direction. So that's not something to get overly concerned about, but it is worth noting when you have that strength dissipate at the end.
That's right, and all in all, as expected, a little bit of resistance at that 8,000 level, so we'll have to keep an eye on that, hopefully continuing to climb near those old highs.
Right, so now did we close above it?
Let's see. Right above 8,000.
Okay. So let's see if we can pass today's high. That was at about 80.17, and really continue the momentum that we saw earlier in the day.
All right. Well, let's take a look at some individual stocks. First on our list is Paylocity. It closed the day up about 1% and above average volume. Staged a breakout here, but ended up closing the day below the buy point. Yeah.
So we just want to kind of show the difference between two different breakouts. And so if we could go ahead and put the Paylocity chart up, you can see how if you look at the range, it looked great for most of the day, but even before the market started pulling back, this was already, it was in the mid-range about midday, and then it closed below the buy point. So what do you do with that? If you bought it when it was looking great and volume was there, this is a composite 99, so all the elements are there, but if you bought it, this is one where, okay, maybe you take a little bit off because it's just not looking right at the end. You could wait and see, give it a little bit of extra room. It's not like it's crossed the 7 to 8% sell rule, but this is one that you have to get a little bit of a tighter leash on because you just want to see that breakout look stronger than what it actually did.
Exactly. And this doesn't necessarily mean that this breakout will end up failing, but one of the things that we also like to consider before we buy is that relative strength line. So even though the volume was there, the relative strength line was still lagging a bit. How does that factor into your analysis and your decision making of whether to start a position?
Well, I certainly want to see that relative strength line in new highs. That's just an extra bonus. But the reality is, for a lot of stocks breaking out right now, they're kind of the laggards. We've been moving, and the breakouts kind of happen over the last few months. So the ones that are breaking out right now are a little bit of the laggard stocks, or maybe they were basing, which is fine, but that can affect your relative strength line and your relative strength rating.
Very good point. And to contrast here, another breakout we want to take a look at is Progressive, which closed up 7% in heavy volume, closed at the top of its range. The volume was there, and what do you know? The relative strength line hits a new high.
Yeah, so this is what you do want that breakout to look like. This is a lot better looking. Now, granted, a lot of people might say, Progressive, I mean, I like their commercials, but the, insurance, that's not sexy, that's not tech, that's, but, sometimes it's good to have in your portfolio a little diversity. Maybe not everything has to be high octane unless you're okay with a lot of, trials and tribulations. So, sometimes having a a slower moving stock. Now, granted, it wasn't a slow moving stock today.
Right.
It closed up, what, over 6%?
Yeah, 7%.
7%. So, a very strong breakout, very strong volume behind it. And, while it doesn't have the most stellar ratings, it is still very high in the composite rating. It's in the 80s. So it's definitely worth taking a look at.
And this was a move on earnings, so something to note. Earnings season is back in full swing. So, 3 months ago, if we do a little rewind, there were a lot of stocks that we saw that gapped out of bases on their earnings reports. Netflix notably issuing its report today after the close, and the initial reaction to that, the stock is down about 3.5% on the report. But looking forward for this earnings season, we are seeing more bases form. A lot of the stocks that broke out 3 months ago are now well extended. But could we see more buying opportunities with this earnings season?
Absolutely. And, I think there's been a lot of talk about how the expectations are for a slower growth. You've got hard comparisons, versus last year, a lot of things that are going into that. But, what it comes down to is you are going to have the stocks that surprise, and those are going to be catalysts for fueling big breakouts. And so you have to be ready for those opportunities when they show up. And like in the case of Progressive, okay, it was up 7% today. If you had bought it at the open, that was around 74. So you would have gotten a lot of that move had you bought it early and acted quickly.
Which is why our strategy for looking at those big earnings moves in the intraday charts is so helpful, right?
Yes, exactly. So being early definitely helps a lot. And then, again, if you see it, if you're early and it starts fading at the end of the day, you can always cut and try again later if it rights itself, or maybe that saves you from losing trade.
Well, I'm sure there will be plenty of examples to continue talking about moving forward.
Especially next week, things are going to really start heating up.
All right, pretty exciting. Okay, everyone, thank you so much for watching this show today, and we hope you head to investors.com for all the latest stock market news and analysis. You can also catch our content across social media, whether that's on Facebook, Instagram, YouTube, or Twitter. So make sure you're following and subscribing for all the latest. Thanks so much for watching, and we'll see you back here tomorrow.